Some people in my comments have asked me to make comments about what I think about the election. Where I think it's way too early, we know generally what the strategies that the Trump administration could employ, and we can think about that to watch data points as thing goes on, but it's entirely too early to make any adjustments that way. But we have our narratives, and we have stated several times that we're basically watching four things. We're watching the dollar, the yen, the yuan, and of course the 10-year bond, and the euro, because these are the main interactions in the world, and these should give us a clue on what's going to happen. So first, if you look at the euro, it dropped 2 points, whatever that is, down yesterday, okay? So, and you can see it accelerated to the downside. On the Japanese yen, it also went down, and it went up about 2.5 points yesterday from like 151. I think it hit like 155. Today it's back down just a little bit. The 10-year treasury, the yield is down a little bit today, but it hit, I think, like 444 or something like that. So the only thing I'll say to this is, since we cut our interest rates by 50 basis points, it's up 80 basis points. So there's two reads on this. It's either a steepening of the yield curve, which is natural when we start cutting our interest rates, or there's something else going on. People are arguing about that. It's up to you what you think. And then with the Chinese renminbi, you can see it moved up strongly, and the Chinese were forced to raise. They peg their currency every day, so they were forced to peg it at a lower rate. So just looking on the first day, our narrative from the beginning has been that we are in deglobalization, that we had a entirely different financial era prior to 2019, and since 2019 we've been transitioning into the new era of deglobalization. And in deglobalization, it's assumed, at least by myself, that there would be tariffs, import controls, export controls, a realigning of the supply chains, all this stuff I just assumed, and I think that, it's happening. And so I look at the Trump election as one thing. It's going to be an accelerator, okay? So I was on with a client the other night. We were talking geopolitical actions. And when you have followed narratives like I have since the early 80s, you actually get a beat on how the data is coming out. It usually comes out in a measured way. You can watch it. You can then determine which way things are going to go. And I told them the other night, it was obvious to me that now the data is coming out, bam, 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 data every single day. About a month ago, we started talking about Germany. I mean, every single day there's news on Germany, so you have to make up your minds on that. Now, I think everyone's assuming there's going to be tariffs. And so I'm not going to say how much, but I'm going to have to read this, okay, because they couldn't write it all down. So China's deficit, or trade with us, is $551 billion. The euro's 527. Mexico, 452 billion. These are billions, okay? Canada, 440 billion. Surprised me. And Japan, Taiwan, Southeast Asia is about $1.54 trillion, okay? So make up your own mind. It's your call. But if it's a 10% tariffs across the board, if they just do 10% across the board, and we know we've heard 100, 200, 300, again, it's your call. But 10%, that's an extra cost to the American consumer of $287 billion. So if it's 20%, it's a $500 billion. If it's 30%, it's $750 billion. Make up your own mind what you think it's going to be. And by the way, don't think that China could have a higher and Mexico could have a lower or whatever, okay? I'm just saying, here are the numbers. Make up your own mind, okay? So as these tariffs come on, this is economics, right? I know we're in the investment world. We tend to think of things as interest rates and stock prices and so forth. But when you start talking currencies, which is really what is dominating where everyone is worried. There's several statements by several different governments today saying that they're really worried about the fragmentation of the global economy and to protect their currencies and all this other stuff. So everyone's paying attention to the currencies. Now, in my 50 years in the business, they're fantastic traders, they're great investors and all this other stuff. But just in my very low opinion, I believe that when you want to look at geopolitical things to understand the big picture so you can make your investment choices, the best people to follow are currency traders. Think about it. They got to know everything. Start at the top, geopolitical. They have to know that. Interest rates, trade, tariffs, production facilities, demographics. There is literally nothing that a currency trader doesn't monitor on a daily basis. So find yourself a currency site where they talk currencies. There's plenty of them out there. Just do a search and follow and see what they're saying, because I think that they have a lot more to say. Okay, so in the currency world, as you know, I believe that the dollar is going not only to be dominant, it's going to be the best performing currency. Just my opinion, make up your own mind, okay? So now that it's economics, so when you saw the dollar go up yesterday, it was because they believe that Trump is going to juice the economy through tax cuts and so forth, all right? So that means we have a greater growth level. And I know everyone thinks the American economy sucks, but basically it's outperforming every economy in the world. So I don't know what's going on there, but it is what it is, okay? So if the dollar is going to go up, there's two things we have to watch, okay? So the first one is currencies that those countries have decided to hook to the dollar, okay? And what you see here are the currencies that are hooked to the dollar, and then you see the official exchange rate and, of course, the unofficial exchange rate. All I'm saying is these countries will have an issue if the dollar continues to go up strongly, okay? Now, the next thing is let's say you're an emerging market currency and you have nothing to do with the dollar. You're not hooked to the dollar, okay? What they do is you're compared to China, which is still considered in some circles an emerging market currency, all right? I didn't say emerging market economy, I said emerging market currency. So if the Chinese renminbi comes under attack because one, the US economy grows, okay? Tariffs are imposed, and China already has its own problems. Then what happens then to these EM currencies that are now going to be judged against the renminbi, all right? Not against the dollar, they're going to look at it versus the renminbi. And this could become an issue for them. So what we're going to do is we're going to watch data points for that, and we're going to watch data points on our currencies that are hooked to the dollar. So there's a new narrative there, all right? So now our narrative is moving what we're going to focus on. We now need to focus on the countries around the world, which then equates to their currencies. So all this stuff of watching the interest rates and stuff like that, I think that's going to be diminished. It's not something we're not going to watch. I'm thinking diminish in importance of what is happening in the world today. So watch what the governments are doing. And so in that light, I will now do videos on the things that we're watching. We're going to do one on the euro. We'll do one on China. We'll do one on Japan, which is the yen carry trade. And we'll do one on the long bond. So all these things are now going to become more and more important as we watch what the next moves in the market are going to be. So if you have any questions or comments, please put them in, like and follow. And again, thank you for following me, and good luck.